write here simply as a chart pattern, whether you look at them as a just a series of support and resistance, the overall trend must be down for a pattern like this, obviously. But whether you're understanding that the support here coming from the lower level, okay, that's the lower level support in the context of this overall downtrend, and then of course the resistance of this direction, you can understand a few things. Number one, this is just two downtrend lines. That's the bottom line. This is just a culmination of two downtrend lines. That's number one. What's number two? This is a trending pattern. Okay, so whether you drew these two lines and levels by yourself, in other words manually, whether you decided that you were going to let AutoChartist help you out with discovering these patterns, or whether you just had a single downtrend line as resistance, because don't forget, you could have simply the resistance on your chart as well. Okay, in terms of the downtrend, of course, every one of these touch points is what? It's resistance, right? And it's the touch points connected that make this downtrend line. And within the context of a downtrend is defined not by lower lows. A downtrend is defined by lower highs. In other words, the downward pressure. Okay? And that is what, if you want to call it, the anatomy of a falling wedge is. Okay? So that's something to keep in mind as well. Alright, so now what? You've got this pattern. If you've got live charts running, which I kind of highly recommend you do whenever you're watching this webinar or any others, keep the live charts so you can keep up with what the instructor, the trader's doing on one hand, but you can see it on your own on the other. Because my pointing out a trade without you being able to recognize it on your own, on your platform, doesn't do you much good, right? I want you to be able to see it on your platform on your own as well. So what we want to do here in terms of the next step is you go to your live charts, and on a 15-minute chart of the cable, what you need to decipher now is the 15-minute chart of the cable in a downtrend. Now, how do you do this? Well, I highly recommend using what I call the wave, and you guys should be very familiar with that if you've been attending this chat room for any period of time. It's the 34 EMA on the high, the low, the close. You squeeze in the market memory, in other words, on a 15-minute chart, the data you want on your screen, on your individual chart, should be about 3 to 5 days. That should be, it's not a finite thing, but you want a minimum of 3 days, really a maximum about 5, because the market memory of a shorter term chart is a 15, isn't much more than that. Okay, and then you take a look at the angle at which those three lines are traveling. We've done this many times here in the chat room. I've got plenty of examples of it at the blog. And you ask yourself, is this a downtrend? Because if it is, now you've got a good pairing between the pattern and the underlying market cycle. And again, it doesn't matter what type of strategy you use. This is not just isolated to a situation where you've got AutoChartist and chart patterns. If you're a manual chart pattern trader, if you are a, whatever it is, in terms of the strategies that you've chosen to employ, okay, whatever you've chosen to do, just keep in mind that you have to have the underlying market cycle as a filter. And that's really what it is. It's not just confirmation, because confirmation insinuates that you're checking that last. This should be an initial part of your analysis where it's a filter. Okay? So I'm not going to really go too far with any kind of chart pattern unless I first filtered, okay, the fact that it's a proper pairing. All right, so that's one example there. Let's take a look at a couple others.